Well, good morning, everyone. My apologies for being a little bit late here this morning. I hardly slept a wink last night, so you're going to want to take that into consideration as I point out potential trades here this morning. I don't know if I've mentioned it yet, but we are pet sitting. Excuse me. See what I mean? We are pet sitting our grandson's 8-month-old Great Dane while they're out of town for a few days. And she's pretty restless, or was pretty restless last night. As a result, I was pretty restless last night. All right. A little bit of a roller coaster ride yesterday. The market, just a quick recap, you can see a couple swings up and down, rallied into the close, so we finished way up here, only to open way down here. So we've got a rather substantial gap right up here that the market may try to fill, although I'm thinking a lot of the momentum is bearish right now. Oh, sorry, spoke too soon. The hawk starting to get a little bit bullish. We actually have a first micro-macro cross in the hawk. Yeah, Mark says like having a new baby in the house. It is. A 100-pound baby. A very, very good dog. My goodness, for 8 months old, I've never seen a dog so well behaved, so mild-mannered, but yeah, for whatever reason, she wouldn't settle down last night, and I had to take her out a few times. Oh, excuse me, there I go yawning again. I think I better put the mute button on so I don't keep yawning on you guys. All right, I'm not going to rush into anything here. Oh, there we go. We're getting a hard edge sell. I was just saying how I'm not going to rush into anything, and here comes the Raptor with a sell signal. It's still early though. We're only, what, 4 or 5 minutes into a session? Yeah, 5 minutes into the session. So here for you Raptor traders, see this little spike that went through your Geiger counter? That's the sell signal. Here now we're coming with a soft edge buy. And you could actually look just to take that above the high of the morning. So we got a number 3 signal that didn't really go anywhere. We come back with a number 2 signal. Of course, there is a chance that we'll come back with yet another number 3 signal, another hard edge bounce. That will give us a double pullback. And you can see this bar, the way we're set up, it's flinching here near the high of the day. That gives us a good chance at a second push entry opportunity as well. But given that this number 3 signal was so short-lived, I wonder if we're not going to see an early rally try to get into that opening range. One more move lower, perhaps? Oh, there it is. There's the double pullback. So we've got a little bit of a conflicted market here. They're having a really difficult time deciding which way they want to go. What time is it? Oh, it's not quite quarter to the hour. Okay, so we've got second push entry opportunities here, higher and lower. You could bracket this range. That means you could buy above the high, sell below. I would go below this low here rather than the more recent low. If it's going to take out one, it's going to need to take out the other as well. They're lining up a little bit here on the short side. The Geiger counter's pulling over. All right, here's a little break. Let's see if it holds or whether the buyers are going to gang up on the sellers and, in fact, try to get into that opening range gap. Well, a solid move lower. It looks like there would have been enough in there to find your profit objective, so not a bad move on the part of the bears. So the double pullback signal is something that we tried to program into the new Raptor, but the variables were just too many that we couldn't account for them all. But essentially what happens is the market ends up going sideways like this, drifts into the cloud, and we produce two moves into the cloud. Each time it comes out with a sell signal. Now in this case, both moves turned out to be hard edge bounces. That is not a prerequisite. We do want to see two pullbacks, however, two attempts to change the trend, two unsuccessful attempts to change the trend. And that is your double pullback signal. Just a little something to keep in mind when you get these consolidation periods. Very often you will see the market break after that happens. For whatever reason, the market has a tendency to let the market move against it a couple of times. Don't know why. It's almost as though, you know, the buyers or the sellers will tolerate one move against their position, but two moves, no, that's too much. And after that, they start to get a little bit more active. Looks like the Eagle signal also working out nicely. Floyd said crude is selling off, and so it is. Crude oil taking a little bit of a dip here this morning. A little bit of a sell-off back into the hard edge. Crude might actually rally up, give us a test of the extreme here, so if we get a hard edge bounce signal, it might be worth trying, at least for the high probability profit target. And with a market like crude, I do tend to double the profit objective because, well, just because. Okay, excuse me a second here, folks. I hear a lot of stuff going on outside my office. I better see what's going on. 1 second. Okay, it's all good. Nothing's getting chewed that should not be getting chewed. Rick asks, when you say hard edge, are you referring to the lines? No, I'm referring here to the hard edge of the cloud. Let's see, we got two hard edges. The hard edge also applies to the eagle because we have the hard edge of the cloud here. This other side is the soft edge. Don't do too much with that. Well, not usually. Sellers made a pretty good push lower. We're back near yesterday's lows here around the 58.65 area, 64.65. They're going great guns now. A nice little late filter entry signal here on the Falcon for you Falcon owners. We've got obviously a bearish trend line. The late filter entry occurs when the filter goes out of sync, comes back into sync, and we produce a signal. You may not be able to see it very well. It printed right here at the secondary support line. The whole time the trend line, however, does not change color. That's the late filter entry signal. All right, things settling a little. Which shouldn't be a surprise. Another macro pullback signal here in the hawk. So still some opportunities. I suspect we're going to see one more little retest here of the low. Our band is expanding quite a bit, so we may produce a counter trend signal. Remember I said this is near yesterday's lows, so we're going to see some buying. We'll see whether the buyers can actually stay above yesterday's lows. If they can, then that's a bullish sign to be sure. We may see a little bit of a rally. This is how yesterday started out. The market made a little bit of a move lower and then recovered, rallied for the remainder of the morning. All right, so here's this little push now to the short side. Oh, all right, is it going to hold? Anthony's starting to get a little bit bullish on the NASDAQ. Says he's looking at 59.40 as a target. That's very ambitious. That's above yesterday's highs. We'll see. Now that we've had a retest of the low and a sign that the market may not be prepared to head any lower right now, I'm looking for that number 2 signal to print. That's the soft edge buy. So we're at the soft edge of the trading cloud. And as with all counter trend signals, you first need to have a trend. So yeah, we've got a trend. Then you need to see what I refer to as a test of the extreme. I didn't coin the phrase, but it makes sense. So in this case, the extreme, the low, the market trying to recover the trend, doing so unsuccessfully. If it comes back and produces a buy signal, then there's a suggestion there that the market may try to head higher. Okay, so here's the warning dot, there's the buy signal. I'm just going to pop in with a buy signal or with a buy order. And we'll cover the trade here below the lows. Counter trend signals, of course, always riskier, always more difficult. But we might see a little bit of an uptick. Rick asks a great question here. Oh, just 1 second, Rick, before I get to your question, and this gets too far along, give me a moment just to jot a few notes in my journal. Okay, So Rick asks, pardon me, Rick asks, I'm looking at the NASDAQ with the Raptor, and I see on the second and third number 3, it started going short. Since I'm new at trying to read the Raptor, how would I have known that I could have gotten in? Is it by seeing the hard line above it as a guide? All right, so let's do a quick review of the signals here. So the number 3 signal, pardon me, the number 3 signal, the hard edge bounce, occurs when the market drifts higher, pulls back, encounters the hard edge, and then comes out and produces a with trend signal. The number 3 signal is a continuation signal. Therefore, you need to look to the left side of your chart and make sure you have at least something resembling a trend to continue. You'll see all these number 3 signals, the ones that work out anyways, always occur when there's something resembling a trend preceding it. The number 1 signal, let's start with the number 1 signal because I have it right here. The number 1 signal develops at the beginning of a trend, or tends to develop at the beginning of a trend. The number 1 signal is, we refer to it as the cloud crossover signal. You can also call it a trend change signal. Sometimes I'll call it that. It occurs when the clouds change direction. So we have a cloud that is bullish and it turns over and becomes bearish. The number 1 signal should be preceded by a pullback, or should be. It is preceded by a pullback which retests the market's commitment to the new direction. If the market seems committed to the new direction, it will print a number 1 signal. The number 3 signal, as I mentioned, is a continuation signal. So it's going to occur when there's something resembling a trend in play and the market makes a pullback. It will pull back to the hard edge of the trading band, and whenever the market encounters the hard edge of the trading band, we anticipate a reaction. So when it comes out of here, it produces a sell signal. You will also print a number 3 signal. This morning, we had, something resembling a longer-term trend. The market came in, hit the hard edge, came out, produced a number 3 signal, not once, but twice. You may not have been in the room yet, Rick, when I mentioned this, but we also tried to program what we refer to as a double pullback signal, which is also one of our high probability signals. Unfortunately, there were too many variables involved to program it, so it's something that you're going to need to spot visually. The double pullback signal occurs when the market pulls back into the cloud twice, each time coming out and producing a signal. Now, when it produces these signals, it doesn't necessarily have to be a number 3 signal. For instance, if we had had 2 pullbacks during this range here, I would have considered this to be a double pullback signal, but there was no signal preceding it, no sell signal preceding it. So this really was just a single pullback and a signal, and this was a double pullback. When the market tries to change direction twice and fails, you're going to take out a lot of, in this case, buyers' stop orders when the market picks up the original trend. All right, and that's why you get your number 3 signal. Not entirely sure why this number 3 signal printed, because we didn't pull back to the hard edge, but I guess somewhere in there, the programming read that that was enough of a pullback. But at any rate, this is what you're going to look for. Okay, now how do you know the number 3 signal is worth taking? Well, the short answer is they're all worth taking. They are all high probability signals. They are all worth taking given two things. First, the context on the left side of the chart. Excuse me. When you hit a market that is in a sideways range, and I may not be able to find one here. Oh, here we go. Spoke too soon. When the market is in a sideways range, you're going to just start printing signals left and right, and nothing's going to have any follow through. All right, so if this happens and you start looking left in your chart and you look at the context of the chart, here's a continuation signal. What are we continuing? There's not really any trend to continue. So is it a high probability signal? Well, yes, in the sense that all the parameters have been met, but in the context of the chart, maybe not. Would I take the signal? Well, if I did, I would take it, but I would dial down my risk amount. So instead of maybe risking 2% on the trade, if it still looked promising to me and I wanted to take a chance on it, I would maybe dial it down to 1% or 0.5%, depending on whatever my account could afford. Let me resize the chart here so it looks a little better. All right. Now, going back here to this morning. Okay, these signals looked a little bit more promising. We've got a number 3 signal or two number 3 signals printing here. Again, whenever the Raptor prints a high probability signal, they are all worth considering. The first thing you need to look at, as I pointed out, is the context. Okay, the context looking a little bit better on this chart. The second thing you need to consider is, can I afford the risk? Your objective in trading is to make money. Now, I know that seems like a stupid statement, but you would be amazed, or maybe not, how many people think the objective in trading is to keep their risk to a minimum. The two do not coincide. Trying to keep your stops overly tight, I'll see people do this all the time. Or they'll try to maintain some sort of fictitious risk-reward ratio. And you haven't heard my rant about that yet, but you will. I guarantee it. This decreases your probability of success. Why? Well, because there's a very good chance the market may try to go up before it goes down. Let's say, like, the Raptor system is very, very good at picking up trades with immediate momentum, but let's say, for instance, you did this trade right here, and you're trying to keep your risk really, really tight, so you put your stops right there. Well, what happens? Oh, well, I got stopped out. And you say, well, okay, well, it was only $45 and I had a 2-to-1 risk reward. Yeah, okay, that's fine. I would have placed my stop at least here above the high of the morning and probably 2 swings back. Now you're going to look at that and you're going to say, whoa, wait a minute, Eric. Your trade is totally lopsided. You've got twice as much at risk as you do reward. How can you make that trade work? Well, I make that trade work by containing my risk here. If you're not comfortable with this amount, you don't adjust your risk exposure by bringing your stops in tighter. You adjust your risk exposure by changing this value here so it's an amount that you are comfortable with. What this does is it dramatically increases the probability that your trade will be successful. Now, as I said, the Raptor is very good at picking up immediate momentum, but sometimes the market will do a little stutter step. You can go through the chart yourself, and you can look at all the signals that printed that had a little bit of a stutter before the market finally went on to the profit objective. It's going to happen, maybe 30 or 40% of the time. The rest of the time, you will have signals like this, where you print the signal, about 60–70% of the time you print the signal, the market never looks back, boom, 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 down you go to your profit objective. So I guess if you're okay getting stopped out prematurely 30 or 40% of the time, then go ahead, throw your stop in tight. Personally, I hate stop outs. And what people fail to consider is that your stop loss is a safety net. It's not there for any other reason than to get you out of a trade that you have made a bad decision on. You thought the market was going down, it went up. Okay, at this point I'm going to say I was wrong, I'm going to get out and look for another trade. But by keeping a wider stop, you're going to allow the market to do this kind of swing. So, okay, fine, you got tagged at $45. I haven't gotten tagged yet, right? My stop could be up here. Oop, a little bit too far. My stop could be up here. It could be nearly $300. What's the difference if it doesn't get hit? So long as it's an amount I can afford. What do you think are the odds? Like, you already know the answer because we've seen the market go down, but what do you think are the odds the market will hit my profit objective before it hits my stop loss? Probably pretty good, right? At the very least, say the market comes down and then comes up, at the very least, I'll probably have at least one more chance to adjust my stops. Right? The market may come down a few bars. I'll at least have an opportunity to roll my stops here, and if I chose, I could probably even roll them bar for bar. So whereas I have initially $300 at risk, if I got stopped out here on the next bar higher, oops, it looks like I would have been tagged for, I don't know, about $140, $150. Right? So it's still, if this is 2% of my capital, then $140, $150 stop out, that's 1% of my capital. You can take losses like that all day long. It's a figure of speech, but you can take a lot of losses like that without doing anything to your capital. If you take 10 losing trades in a row at 1% of your capital, you've lost 10% of your capital. Those are not the trades that are going to ruin you, right? The trades that are going to ruin you are the ones where you're lopsided on the trade and you're risking more than you can afford. Now, a good trading friend of mine, Tom Loche, he likes to run ultra tight stops, and I mean ultra tight. He'll give the market maybe $20 or $30 to get going. Otherwise, he'll stop himself out, or he'll let the market stop him out. Tom will routinely take 5, 6 stop outs in a day before he'll finally hit a winning trade, and that will offset his losses, and it will earn him a profit as well. But I've always said to him, I said, Tom, why are you taking 5 $50 stop outs? Why don't you just run one $250 stop? Because not only are you getting tagged each time, but you're also incurring extra commissions and fees and so on. But that's the way that suits him to trade. He could not envision running one stop for $250 or $280. Never mind, he may incur that much as a loss, and my stop may never get hit. That's the thing about trading, folks. There's 1,001 ways to do it. Ooh, looks like on my little spiel here, I missed out on this very nice hard edge bounce. Speaking of hard edge bounces, another number 3 signal. This one should have printed a number 3. I guess some of the parameters were out of sync, but visually that would also be a hard edge bounce. So you got a couple chances to get in. And the market in a tailspin here this morning. So things definitely in favor of the bears. Very bearish day right now. Rick says, how can I learn to read the Raptor like you can? Well, you're on the right track asking questions. The rest is a combination of screen time and journaling. If you haven't started a trading journal, I would encourage you to do so. It doesn't have to be anything fancy. I just use a spiral notebook. And what you want to do is you want to make notes of your trades. You're not just going to record the entry and exit and how the trade ended. Rather, you are going to record the reasons why you took the trade. And that's probably the most important. And I will show you a page. Now, my trading journal has evolved a little bit since I did this one. This is, how long ago is this? Oh, this is way back. This is a 5-year-old entry now. Nope, no, sorry, 4-year-old entry. But you can see it's just a spiral notebook, and I record the time, whether I'm a buy or sell. Now I don't even write sell or buy. I just put S or B. The instrument I used, so this would be the Eagle, the Hawk, the Falcon. The Raptor wasn't developed at this time. The instrument I'm trading, how many contracts, my entry price, where my stop loss is. Now I record my profit target as well. But here's the ultra important part. You make a note of what's going on. Why did I take these trades? The idea is that you want to have at least 2 reasons for taking a trade. If you can think of 2 reasons for taking a trade, it's probably going to work out. And they don't have to be, you know, very pie in the sky kind of reasons. They don't have to be, you know, really good reasons. You can see here, I looked at the first signal, I saw head and shoulders top. And then what I do when the trade works out, you can say I took a loss on this one. I try to record why I think the trade didn't work out. And a lot of times I'll put stars and exclamation points for those points. So here it didn't work out. I got in too early. There was no trend established yet. A few minutes later, there was a signal. This was during the profit run, by the way. That's why there's so many orders here. Normally I wouldn't do this many orders, but I was showing off. So here, a few minutes later, I had the buy signal on the YM, took 2 contracts, also ended up with a loss. First micro macro crossover, and I wasn't sure if it was in a retrace. Crude oil was up. The relationship isn't as strong between crude and the YM anymore. But you can see even after all this time, I can still recount why these signals worked out. You know, these were profitable trades. This is how we develop things like the first micro macro cross for the Hawk, how we develop the second push entry in the Falcon, by taking the trades, recording them, and seeing what works and what doesn't. Now, when you keep a trading journal, like I said, the important thing is to write down your reasons for taking the trade. I guarantee you that within 2 weeks, you will start to see patterns emerging. Good patterns as well as bad patterns. That is how you are going to learn. When you see a trade fail and you look back and you think, why did that trade fail? And if you can't figure it out, you can ask me. You can shoot me an email and preferably a screenshot so I don't have to go hunt for your chart. And you can ask me, why did that trade fail? Okay, so here we're getting a soft edge buy. And if the market comes away from here and produces yet another sell signal, then that will be, again, that double pullback type setup. The number 2 signal, the counter trend signal, tends to work better after a number 3 signal. We should have actually labeled them 1, the cloud crossover, 2 should have been the continuation signal, and 3 should have been the counter trend signal. Oh well. Hindsight being what it is. But you will find that very often the number 2 signal will work a little bit better after the number 3. And again, that's something that you learn from recording. Oh, okay, so here we get a double pullback. My trade could be in trouble here. But I've given it an ample amount of room. And we'll see whether the buyers try to push back a little bit here or whether the sellers will just do a little bit of profit taking. I'm not looking to stretch this trade very much, just looking to sneak a couple dollars out of here in a obviously downtrending market. Yeah, Rick says the NQ looks sideways to me now. Well, yes, there's always going to be a sideways period during a transition, right, from down to up. We do use our trading bands to give us our directional bias. So technically, the bands are still stacked in a bearish fashion. But when they become very overextended like they do here, you can start to look for those counter trend opportunities. As the bands become very, very broad, the market in this case will become oversold. In fact, one of the members, Jim, I haven't seen Jim in the room for a little while now, but he actually used to make notes of the width of the band. So he would look, he would say, okay, the bottom of the band is here, say 58.36. The top of the band is up here at 58.54. And he would record the width of the band. And he noted that as the band got to a certain it got extended to a certain range, it would have a tendency to try to normalize a little bit. And that's what's going on now. Prices are just normalizing somewhat. And I'm a little bit late on the trade, but we'll see whether I can't pick up a couple dollars on the pullback anyhow. And the thing when I'm journaling as well, I ask myself questions like, will the market pull back to the hard edge? Will it pull back to the resistance line? Will it pull back to the high of the day? Or whatever it is I'm seeing, is it going to try to fill the opening gap? And then I'll answer these questions as the trade progresses. All right, we're at break even. Let's see if we can't sneak a dollar or two out of the trade. They say that you've heard the stat that 90% of traders lose money. They say out of the 10% that are making money, 90% of those keep a trading journal. And that other guy, he's either naturally gifted or just plain lucky. But either way, chances are pretty good that you're not him. Come on, don't flinch yet. See, this is where I got in a little bit late. It's costing me now. Had I entered on the hash mark, I would have reached my profit objective, but now they're making me struggle a little. Rick, you don't have to thank me for explaining stuff. That's what I'm here for. If not enough new people in the room take advantage of asking questions. You should ask questions. If there's something you don't understand, by all means, ask away. Rick asked, the darker shade in the lower band, what does this mean when it gets more narrow? Sideways or a change in market direction? How do I look at this while looking at the number? Okay, so part of this is purely cosmetic. It's the programmers trying to make the charts look interesting. It's funny, when you start designing software, you'd be surprised how quickly you run out of cosmetic options. That's one reason the Raptor prints in blue and magenta, because there was only so many ways that we could display red and green bars. So part of it is just the cosmetics of it, just the two bands overlapping. When the bands do start to overlap, though, it does suggest waning momentum. And if the momentum shifts, you're going to get a trend change signal. So you don't really need to read too much into it when the band starts to get narrow or twist up. In this case, you can see when the band becomes more extended, you can look for the counter trend signal, which is what happened here. And then when the band starts to get narrow, you can anticipate a trend change signal. But that's about all that you really need to read into it. See, now the bands are twisting a little bit, overlapping somewhat. I'll be thinking, are the sellers going to show up here again and try to resume the trend, or are we going to get a trend change signal? If I'm only looking to take a few signals a day, is this a signal I want to try to capitalize on? See, so we're producing buy signals, but as far as the trend change goes, remember the number one signal, the trend change signal, has to be preceded by a pullback. So I'm anticipating a pullback, and then if the trend's going to continue higher, well, then we should produce another buy signal. It's a rare instance that the market takes off on you without at least giving you one chance to get in. You can see here on this counter trend trade, you had 1, 2, 3, you could even have counted that one, as 4 opportunities to take this market higher. The early one, of course, being the best one. The one that we ended up taking, or I guess I took this one here, still not a bad opportunity. Oh no, I went after this one because it was after the number 3. Sorry, that one right there. Still a decent counter trend opportunity. Yeah, Rick says, sorry, I don't see a number 1. No, it hasn't printed yet. What are the 2 things we need for a number 1 signal class? There's 2 things we need before a number 1 signal prints. What are they? I just said it not more than 10 minutes ago. Yeah, Jeff says a retest, that's 1, so we need a pullback. What's the other thing? We need the clouds to cross. No, not 2 retests, we need the clouds to cross. Clouds cross, then there's a pullback. If the market is going to honor the new direction, it will continue in that new direction and it will produce a number 1 signal. What do we have here? Well, we got a buy signal, but do we have the clouds crossing? Nope. Do we have a retest? Let me see. Nope. So we have neither. Is this a valid signal? Yes, most definitely. It printed a signal. Is it a high probability signal? Most definitely not. Can you take that trade? Sure you can. But you probably need to cover it way down here. And trade manager says, nope, sorry, Eric, for your account, you cannot do that. That's out of reach for you. So we wait. As the famous trader Jesse Livermore said, the money is made in the sitting and the waiting, not the trading. This is not a production line. If you want to be busy all the time, there are less expensive hobbies than trading. You can build a model train set in your office and you can watch the trains run around while you wait for the next signal to print. Ryman asks, Eric, sometimes when I use a break even with a 1-tick offset, when I'm out of the trade, I do not get the 1-tick profit. It shows I lost 1 tick. Do you have an answer on that? Yes, Ryman, you are the victim of slippage. Be grateful that it's only a couple of ticks. I was working with a fellow, he said he was getting slipped 8 ticks trading crude oil. I said, how long has that been going on? He said, a couple of years. I said, have you spoken to your broker about it? He said, no. I said, you better get on the phone to your broker because they're giving you crappy fills. All right, now this is interesting. It's kind of like a very drawn out number one, isn't it? This signal right here. And you could have considered it as such, even though it won't print. That would be what we would consider one of our more advanced setups. But you don't need to worry about those just yet. We'll deal first with the regular trades. Okay, so now the cloud's still crossing. The market's still trying to get a little bit more bullish. Let's see if we get that little bit of a pullback. Oh, Anthony, still long, still looking for, what was it, 59.40? Good for you, Anthony. You got a little ways to go. Yeah, Ryman, it's funny you should mention this because Andrew just said the same thing. Ryman asked, okay, how about setting the offset to 2? Would that maybe stop the slippage? Yes, it would. Of course, you may need to adjust. Well, okay, 1 second here. So with your break-even offset right here, by default it's set at 1. You can set it as high as you want. I don't know if you realize this, but you can also set a negative offset. So it can hit your break-even trigger, and you can be break-even minus 7 ticks, if that's what you wanted. Definitely you can go break-even plus 2. Just realize that when your break-even trigger is hit, your stop-loss order is going to be that much closer to the current market. So I don't know if you want to roll your break-even trigger another tick along as well to try to keep you out of the slop, the choppiness that can occur. But yes, a 2-tick offset would help. Honestly, I wouldn't fret too much about a 1-tick loss. It is summertime. The markets are a little thinner. You are going to get slipped a little bit. If you get slipped all the time, then you may want to talk to your broker. If it happens once in a while, well, that's trading. Occasionally, you're going to be the last guy through the gate, and you're going to get whatever you get. Yeah, way to go, Rick. You got it now. Rick says it looks like we're heading for a cloud crossover. Very good. Clouds have crossed. Yep. We're getting a pullback. Yep. So now let's see whether we get that number 1 signal to print. Now remember, we still have a great big downtrend from only about a half an hour ago, so let's not get too crazy on the buy side. Remember what I said about context. But yeah, if we print a number 1 signal here, I won't go in heavy, but it would be worth trying for sure. See, when we've had an extended downtrend like this, there's always a danger that these pullback periods are going to be nothing more than great big bear flags. For those of you unfamiliar with the term, the pullback that you get in an uptrend usually makes this little flag shape before the market heads higher. That little flag shape's known as a bull flag. The opposite being true in a downtrend, where the market makes this little consolidated pullback move before prices head lower. This is known as a bear flag. So you can see that the way things are right now, it does have a little bit of a bear flag flavor to it. I'm not saying prices won't rally from here. They most certainly can. But it is just a little something to bear in mind. Back at the, oh, there it is, right there. Okay, so let's get our order in. And even though I have my initial stop down here, if I do get filled, I'm going to look at a possible test of the extreme and a failure. So if this trade advances, I'm going to become very aggressive with my stop. As soon as I see the market try to move lower, I'm probably going to cover the trade. I'll probably cover it right below here. In fact, I'll do that now. What I'll do is I'll give them just below the support line here, that nice pink line. If they fail at this point, well, it's probably time to go. Pardon me. Now, if you want to be ultra aggressive on your stops, you'd see this bar with this tail on it. You could roll below there as well. Take a little bit extra out of the trade. And my break even is at the high of the day. I may bring my break even in a couple of ticks. I'll bring my break even into the high of this bar. So with my logic counter, I know where the bar is going to finish. If it hits the high and completes a bullish bar, I'm going to take the trade to break even, or automatically take the trade to break even. Oh. See, this is my concern, that I'm going to get a test of the extreme, a retest and a failure. Okay, now I'm at break even. So let's see if they give it a push here and break on through, or if they're going to tag me at break even, which is fine too. Come on. There you go. You can do it. See, now let's say I want to be like Ryman and I want to protect an extra stop. I can go break even plus 2 ticks, hit break even, and now I've saved 2 ticks instead of 1. But you also see that it brings me a little bit closer to the current market. Yeah, Andrew says it makes it a free trade, no risk. That's true, but it also decreases my probability that this trade will work out. How many times have you guys seen me get tagged at break even only to watch the market go up to my profit objective? A few. And if this one doesn't get some giddy up to it, it's going to be another one. Nuts. Okay, so I'm tapped out. Let's see if they move on up to my profit target now. Because this is what the markets do. They chop around back and forth, try to confuse everybody to what's going on. See, now if this does turn out to be a test of the extreme, this is why I was so aggressive with my stop, because I was thinking, maybe this is a great big bear flag. We're going to see another break lower. I don't want to be here if that happens. I want to be out of this trade. Oh, way to go. Ryman, one up me. He says, hey, Eric, we're in scalp mode anyhow, so I just took a scalp profit. And right you are. Look at you. Yeah, 50 bucks is 50 bucks. Like I said before, you don't need to trade often, and you only need to find two $50 trades a day to be a successful trader. What? You say? Yes, two $50 trades. Because after that, it's all about capitalizing correctly. It's all about putting enough contracts in play to make the trade worthwhile. So whether your account allows 2 contracts or 3 contracts, trading a single contract will give you twice a day for $50 will give you $20,000 a year if you can do that every day. If you traded 2 contracts, that would be $40,000. 3 contracts would be $60,000. 5 contracts, $100,000, and so on it goes. All from just 2 $50 trades a day. Well, this is kind of last chance for the sellers to step up here. If they lose their grip at the highs, then, well, I guess that's not the high. That's the low of opening range. Sorry. The high was, what was the high this morning? 58.90 something. All right, well, we'll put this on the shelf for now. The hawk into yellow bars, so that kind of spoils any signal we would have had. The Falcon trend line getting rather flat, the filter starting to break up, so things getting maybe a little bit more neutral, and as Ryman already pointed out, we are in scalp mode after all, which is to be anticipated. I wouldn't mind seeing one more poke up and one more pushback. That pushback, I might be persuaded to try to sell. If you're on the Raptor here, it should produce a number 2 signal. That will be the counter trend signal. I just want to make sure all the buyers are flushed out before I try to sell. I don't feel like trying to ride out a big swing. And I've already had 3 profitable trades today, so really my day is done. Oh, all right, here's the early soft edge sell. Didn't quite get the pushback that I was hoping for, but hey, we're in a demo room. Let's demo. Oops, I don't want to take 2 contracts on a counter trend trade. So what I've done is I've moved into manual mode. So you can click here on risk percent and manual. So I moved to manual mode. It defaults to this value right here. Because it is counter trend, the market is struggling. I don't know which way it wants to go. In fact, I'll probably, if the order gets engaged, I'll probably move my stop up here. And it looks like I can make that adjustment right now. So we got a chance for a second push entry opportunity. Where are they going? Okay, well, there's a little bit of a push up. What I'm hoping is the buyers are going to stick their head up here one more time, and if the sellers are serious, they're going to knock them down. It's almost as though the buyers are afraid. Okay, there's the push. Okay, let's see what happens. They're knocking them back a little. See, the Geiger counter's still fairly bullish here. Lots of buying. Oh, there's a little bit of selling coming back. We are getting a little late in the morning as well. Things are going to thin out as we get closer to the top of the hour. Which may lead to a sideways drift. I don't think we have any other signals printing. No, not yet. The Hawk's still in yellow. The Falcon's starting to break up a little bit more, also suggestive of maybe a sideways or a retracement move. The Rafter will be one of the few tools to give you a counter trend signal early. Rick asks, the darker blue band is at the bottom on the NASDAQ. What would that suggest? Well, that tells us that we have a bullish band, right? When the bands are stacked this way, we have a bear market. When the band is stacked this way, we have a bull market. I can probably cancel that order. Or a bullish bias might be a better way of looking at it. The sellers owe me one more move lower though. They made a very, very strong move out of the gate. They are not just going to walk away from all that. They owe me. Rick, you're reading too much into this. Rick says, but the band is wider at the top, not sure how to interpret this. We purposely designed the system to make it as easy as possible. I can tell, Rick, that you come from a background of many indicators, and you're probably very proficient at both. Probably even more proficient than I am, and I know my way around a few. Don't read too much into this. When the band is stacked this way, it's bullish. When the band is stacked this way, it's bearish. If the band becomes very, very broad, the market is going to become more oversold, or if it's stacked the other way, overbought. So in this case, you can see the market is fairly oversold. So when we produce a counter trend signal, the hard edge of the trading band becomes our profit objective. And you can see we did a very nice retracement to that and actually went a little bit further before it reset. Okay, we're getting that soft edge sell signal again. I'm going to just short this guy. This band is bullish. It has a bullish bias, but a very weak bullish bias, right? It's not nice and wide like this band is, right? This is a very strong bear trend. This is a weaker bull trend. Don't try to, read too much into it because one band is broader than the other. They're probably actually both the same size. It's just that they're overlapping. See, here's the height of the faster cloud, and I guess the slower cloud is slightly bigger. There's the height of the slower cloud. But as I mentioned, the tools were specifically designed to make them as easy as possible to use with as little user subjectivity as possible. You still need to think, but we try to keep it to a minimum. All right, so here come the sellers. Hopefully they're going to give me that. Just a couple more ticks so I can do something with my stops. Pretty please. Aha. Rick says, I studied mainframe programming. I'm detail oriented. Oh yes, I can just imagine the flow charts going through your brain. If this happens, then I do that. When we trade, we try to be more reactive than predictive. Right? We react to what the market's doing. It's struggling to get higher. It's come out of a big downtrend. We produce a counter trend signal. Okay, let's give it a go. As I mentioned the other day, I won't ever have all the information to make a trade. Every trade has a certain degree of risk associated with it. Yeah, Andrew says, I don't like these soft edge sells, as the market likes to use the bands as support, and that's absolutely correct. And there are a few members in the room who just don't want to take the counter trend signals, and that's fine. Listen, folks, at the end of the day, it is your money. You certainly don't need to answer to me for it. The success is all yours. I'll do what I can to help, but the final decision always rests with you. All right. So once again, you see, if I wanted to be a little bit more aggressive with my stop, I've got this candle right here with this nice little wick on it. I could opt to roll above there. That will take a little bit of risk out of the equation. But every time I bring my stops in, it also increases the chance that my stop's going to get hit. Right? There's always that trade-off between running a wider stop that gives you more staying power and that closer stop that reduces the risk but may stop you prematurely. Yes, Rick asks, so the darker color band indicates market direction. Yeah, essentially what we're looking at is we're looking at the soft edge relative to the hard edge. If the soft edge is above the hard edges, we have a bullish bias. If the soft edge is below the hard edge, we have a bearish bias. If the soft edge and the hard edges are all intertwined, we have no bias. All right, well, I did get tagged early on that, but it's probably just as well. I do expect the market, like I said, to give me one more move lower. So if you're going to continue trading, The rest of this morning, I think that we can anticipate one more push to the short side before the buyers may try to get a little bit more aggressive. It was a big move down out of the open, though, so I'm not sure really the buyers are going to be able to push back all that hard, but we'll see. I would not be surprised to see the day end up in a little bit of a sideways fashion. All right, boys and girls, I will see you again tomorrow to round out the week. We'll talk to you then. Bye for now.